What is going on, your average investor? Today we're going to be taking a look at the Intel stock fall, another day, another problem, and what it means for your average investor looking for some stocks to purchase. As a reminder, we always like to tell people, please subscribe, please hit that like button, please turn notifications on. We are trying to monetize the channel. That way we can do some more giveaways and we can keep everyone informed on what we're looking at in the market and what we think you should be. So let's take a brief look. Intel stock has fallen about another 1.2, 1.5% today after the report that Broadcom tests of Intel silicon wafers have continued to fail. Pretty disappointing, relatively concerning actually. So Broadcom is still evaluating Intel's products and their service offerings to determine whether or not they're going to be able to maintain current conditions under their chipset. Intel has yet to comment on the report. Their stock has dropped 61% in 2024, making it the worst performing stock on record for the company. Challenges include stiff competition right now in the chipset market. There's declining PC demand and disappointing Q2 earnings. August 1st, Intel announced plans to cut about 15,000 jobs. It also suspended its dividend. It's implementing other restructuring efforts and restrictions. So the stock has surged about 10% on August 30th following the restructuring rumors. However, that immediately came back. So there's been some talk about potential splits, business splits and mergers in the segment or in the area. And analysts have actually remained relatively cautious about the stock with concerns that the cost of restructuring could weigh in on Intel's financials for at least another year. Taking a look at the chart, this is down pretty bad over the last 6 months. It's down 56%. Year to date, 58%. 1 year, 46%. 5 years, it's down 61%. So a lot of the experts are expecting positive momentum, projecting Intel stock to raise, pretty significantly. I don't know. Looking at this from a broad standpoint, it's one of those where, the market cap potentially is there. It's got great historicals from a chipset and a manufacturing standpoint. But the fact that they're going to be cutting so many jobs, the fact that they're going to potentially be restructuring, pitfall after pitfall, and setbacks continue to settle in. Looking at it from a broad standpoint, if they kept the dividend, that would have been a nice stock to stick in the portfolio at a great discount price at $19. About 2 weeks ago, it was just at $30. And then we had this steady dip starting in July, all the way down. So had they kept the dividend, that probably would have been one that we would have taken a look at. Right now, really tough to justify this. There could be some nice upside potential here. But this one really seems like a pure gamble, pure speculation, and we don't know if the stock's ever going to come back to historical levels. With that said, might want to put your money somewhere else. Might be something to watch though. You could probably do a couple cash secured puts on this one, try to collect some and get it at a really low discount. The problem is, will it ever recover and then be able to make your money worthwhile when it does come on the upswing? If you're a savvy investor and you think that this is a play for you, write it in the comments. We'd love to see what your entry, your exit points would be and what you think of the overall health of the company. Thanks again for another session of Your Average Investors, and don't forget to click like, subscribe, and tune in for next time.